All right, guys, back for another Bitcoin technical analysis. So, today I want to talk about the recent price action. There's not much going on the last, few days, and we have been tweeting on or posting on X. So make sure you follow our X at Real Capitable. You know, because sometimes we just don't want to. We don't feel like there's a video worthy of making, so we just post instead. And I want to just talk about a previous video we made a few days ago, and this is the one. It's basically on Bitcoin to 51K, and I just did a little bit of technical analysis. It was a very quick one. I just want to address a comment here because you know these every time we doing these technical analysis based off of very fundamental indicators and patterns and all that. We are not a perma bull or a perma bear. We look at what could go both ways. And so we were talking about how Bitcoin could go back up to 65, and then, but of course we could still be in a symmetric triangle that could always also head back down to the bottom of the trend line and all that. So if you just look here on the 1 hour time frame, and we did talk about this stuff, right? We said we could we could break out, or we could break down, and we broke out. We actually broke out of this flag here. We broke out this flag. We didn't really stay there too long. We made a lot of resistances, and then just got back down. And this region between 63.2 and 63.4 is a pretty major resistance. So we just went sideways and just bounced between these, and then we just went straight back down to the pattern, to the bear flag. And yeah, we could really see just how strong the last, you can call it a dump or you can call it a correction, whatever you want to call it, right? So it's like, okay, well, sure, I don't always use the Fibonacci, and I definitely don't use the Elliott waves. I think Elliott waves is a little far-fetched, but if you want to do it, go ahead, right? Like, I mean, if you have other ideas and you think we're not right, come on our show and show your charts, right? Because we are very, very open-minded. We think we don't think we're always right. We don't think we're always wrong. We just look at what the chart's telling us, and that's what we're just trying to say, right? And so we're happy to learn more from you guys if you have any ideas, and I thank you for your comment. But like in any case, right? Like a lot of these projections, I don't really, especially if it's too long-term projections, like the one going to 46K or the 151K or the one going to 140 or 120, whatever it is, you have to heed that. You have to really consider that in case really it does play out, because it's like longer time frames you won't see it in a matter of months or like weeks or days. You could see it in 6 months, a year, and all that, right? Because if you're looking at weekly, that's you have to be very patient. So with that aside, okay, let's just start over. I think this is worthy of a video right here, because right, like on the weekly we had a strong close, but we're below the 21 moving average. And although with the Stokes curving, yeah, I mean we could do it, but it's like we have the M kind of made here, especially the last couple days. We have an M like this. Okay, the M doesn't have to be perfect. So if this plays out, I'm just going to be a little conservative here. The target is going to be, it's still going to be the 51K I was talking about. It might not even hit though, and I don't want it to hit because I don't want Bitcoin to go through another cycle. But if I'm just looking at the numbers, the charts, this is the region we're bouncing. We might have a good support here. We might survive, right? But patterns are patterns, right? And especially if a market like Bitcoin with so much volume, these patterns do play out. Unless you're doing like a 100k volume dead shitcoin, right? Like then these patterns are really unpredictable. You can't really predict anything. But we are open-minded. We are always prepared to go both ways, depending on the situation, if certain criteria are satisfied. So right now for the weekly, this is what we're looking at. But since the weekly has not that many candles, we can't really find other patterns within. So we have to go to the daily. Now for the daily, look at what's going on. So we had this major dump. Now stochastics are now high, curving down. Price going down. Are we heading to the 200 moving average? Could happen because we got rejected by the 21. And I still see some sort of flag here. Something like this. So as we were talking about here, I made this little flag. That's why that's why flags are here, because you could break out and break back in, right? I didn't say it in that video, but I possibly have said it in some other video. So this is what we're looking at right now. So for the daily, that's what's going on, right? Take this as the measurement or measured move, and if let's say we break right now, we're heading slightly lower, 49. But I looked at the numbers or the charts a few days ago when it was doing really well. Well, the 4 hours is okay, it's curving, but would it stay or would it really curve? We won't know until we actually have some curvature. But 4 hour we could have a bull scenario, where falling wedge. That's a bull flag. Let's take this as, for conservative sake, target. We might just try to hit back the 200 moving average. So 65k was what I was predicting too. I mean, we did get rejected here twice on the on the on the 4 hour, and not as good because we previously had a falling wedge like this, or a bull flag like this. I can't talk today. It's getting late. So we broke down of the bull flag, which is not too good, to be honest. And considering that July 4th is coming for the Americans, so that's gonna be a major holiday, and people are gonna be away from the charts. So we can do it like this. We can also do it like this. So it's like we're not completely done yet. I would say we can still redraw this to have another shot at the bull flag. But the 1 hour is not looking too good because you see we couldn't get above or hold 60 for the stochastic. Volume is, well, one good thing you can say is volume for this bear flag is waning. Okay, so that might be a reversal. Another thing, if this RSI could stay up, then we have a bullish divergence. You see, price is lower. I mean, there is a type B or type C, like a slight one, because you see this is flat, but the price is downward. So but we did break down. Did we close yet? No, we have 31 minutes before we close, but we did close below the. You see here. Let me zoom in. 200. That's not a good sign. We want to close above. Well, can this 1 hour just break back? It is a strong close. We have a strong wick here. So this is what I'm seeing right now in the immediate short term. Yeah, well, clearly we can see a bullish divergence here. Let me show you. Let me get rid of the Stokes. So we could say using this point here and this current point here, and let's change the color to like green. Oh no, that doesn't make a difference. Let's do blue. And for the RSI, we can use this. So clearly that's upwards trend, and that's a downward. So there's a bullish divergence. Does that necessarily hold? Not necessarily. We could always keep going lower, and this keeps going higher. We could have a so that's a never-ending scenario. So moving averages, that's what I use. I use those oscillators. 15-minute, yeah, 15-minute moving averages are looking bearish. I don't even want to look at the other ones. So the key is whether we break out of this. If we do break out of that, we are out of this pattern. But we did try to retest and it didn't really do well. I mean, we were kind of, yeah, so it's hard to really draw this. I mean, use a longer time frame to draw this. Maybe like that, you know. We retested, came back up, and then failed to break again. We went back down to the pattern. So this is the best I could draw. And you gotta adjust for different different time frames too, because different time frames tell you different stories. So I'm gonna just delete this. I got too much stuff going on. In any case, if we do break up and we get to 65, in our previous video we were saying what? For the daily, this looks like a symmetric triangle. Does it still look like a symmetric triangle? Well, we've got to find out. Let's do. It's hard to find the right color. Yeah, so yeah, there is still this symmetric triangle here. So if we do break up, I'm still gonna stick with the prediction where, yeah, if we break out, get to 65, sure, we get to the top of this. It's a lower low, lower low. I mean, lower high, lower high, lower high, lower high. It's just gonna come back down. We're not making a lower low, so that's not entirely bearish per se. But I'm saying this pattern is usually bearish more than 50% of the time. It could go like that, and we could really. There's really two ways to look at this. And if you want to pull the fib, sure, I'll pull the fib later. This is a bull flag, and then people are gonna call, oh yeah, that's ridiculous. We're gonna go to 100K, right? Like, sure, yeah, but like the downward movement. Let's say right here, that's a 42K. Of course, then we're looking at support, resistances, right? We have so many of these to look at. We don't always hit the target. So all your patterns and targets can only go as far as support and resistance. Okay. So yeah, I mean let's do this. Let's pull the fib. I mean I do have it here, so I do look at it. Okay, so right now we're here. So we did kind of bounce from the 382, which is good, right? But then the next level will be at 56K, and then 51K. Golden Pocket is actually at 51K. So if you are a firm believer in Fibonacci, you should heed the idea that we should always go back to 618 and 65, the Golden Pocket. And so 51K is not ridiculous at all, right? And now we can always look at the volume profile. Well, that's a little too far. Let's look at this. So support, it's a 51.7. You see, that's the major support. Now, sure, we can also look at it as weekly, but then weekly you're looking at data as far as 4 years ago. And I'm not saying it's not accurate, but 4 years ago there weren't as many. Well, first of all, there's no ETFs, and there's no not as many institutional players. So let's pull the fib, not the volume profile. Yeah. So you look at this, it's not gonna really help us because we're saying the the point of control or POC is at 16K. So I mean that's like a major support. If you look here, 51.7 is still a major support. So let's do it in the 4 hour. So we look at multiple things, right? We just don't look at, what did you call it? The Elliott wave or the Wyckoff accumulation. I actually, three 3 years ago, I was hoping that some of the YouTubers were right. They were looking at the Wyckoff accumulation. I was like, yeah, we should go back up to, all-time high or close to it. We never did. We went down to 15K. So I really lost confidence in most of the YouTubers. So let's look at the volume profile. We can do all the way here. So yes, again, 51.9. So that was my target. My target is actually looking at this node here. So it's not what I think, it's what I see, right? And this point here, 57.1 is our last resort before we go down there. So we're just gonna look at both things, both sides, and just analyze the situation, and then you just act accordingly. Should you short? Should you long? How long should you hold? Or hodl? So this right now still this flag. We've got to really pay attention to this. If this really just determines our fate for the next at least a week, right? So pay attention to that. Alright guys, that's it for today, and hope you had some value. If you think we said something that was outrageous, feel free to share your thoughts. We can invite you to the show, you can share your ideas, and then educate us. And so if you like this, make sure you like and subscribe and turn on the notification. Follow us on X or Twitter at Capitable, and I'll see you guys in the next video.